Hi, my name is Ilya Zlotnik, advisor and partner with Vivaldi Capital Management, and welcome to today's conversation with Jeff Glazer. Jeff is a business owner and entrepreneur that built and sold not one, but two very successful businesses, all under the age of 40. And if that's not remarkable enough, he built those businesses in two completely different industries. One of them was a medical spa chain, and the other one manufactured doors for grocery stores. And for a large and significant part of building those businesses, he did it at the same time. Jeff, it's great to have you on.
Thank you. Very happy to be here.
Well, clearly you're a very talented entrepreneur. When did you start your first business? When did you know this is the direction you wanted to take in your career?
So my dad's a dermatologist. He owns his own practice. He's been doing it since I was born. And I guess it kind of just rubbed off on me. I remember when I was a little kid, my dad would he would package his own pharmaceuticals. So in the mornings, on Saturdays and Sunday mornings, we'd be counting pills, doing other stuff like that, so that he can, have a better business and make better margins and service his patients better. And so through the years, I've just kind of always watched and admired my dad. And that was a big part of me becoming an entrepreneur. I had a bunch of different business ventures since I was little. I think when I was 14 years old, I was a caddy during the summer, and I thought that a nice side business would be converting home VHS tapes to DVDs. So I'd caddy during the day, and I'd sell my customers as I was walking 18 holes with them on my services. And then at night, I would actually, convert the tapes from tapes to DVDs. So that was when I was like 14 and 15 years old. When I got a little bit older in college, I did a shipping and storage business where we moved students to and from school, and we stored their boxes over the summer. Terrible business, but learned a lot doing it, and actually made a really, really close friendship and someone who's like my closest business confidant to these days. So still maintaining those friendships. And yeah, I mean, a bunch of different things throughout the years. Always had fun coming up with business ideas and floating them with my friends, and just something that's been a part of me my whole life. So
interesting. So when you come up with business ideas, is it just something that comes to you in the shower, or do you actually dedicate time and say, here, let's whiteboard this out, and you get some friends together?
It was always just stuff where we'd be out with friends and hanging out, and something would come to mind, and then I'd think, hey, I'm a genius, and this is going to be the next Facebook or the next LinkedIn or something like that. And we'd spitball for a little bit, and usually it would never go anywhere. But I think one of the things I always did was I always took it a little bit further than just saying, hey, I have an idea. I really thought through, how can I operationalize this, and what can I do to actually make this into a business? And so I think it got me thinking through, like, what's a good business, what isn't a good business. So yeah.
Yeah, I mean, they say ideas are a dime a dozen. Right? Totally. It's actually the execution of it.
Totally.
And I can think about myself as a teenager. I always had ideas, but I didn't necessarily start to execute them, especially at 14.
Yep.
So I think that's a big differentiator, obviously, in your personality. So you had the VHS business that probably lasted for a little bit, right?
A couple of summers.
Yeah. You learned some stuff. I assume you didn't make too much money doing that?
No.
It was more a learning experience.
Yeah, it was fun. Something cool to just say. It was different.
Got it. And then you did the college, the business in college with shipping and moving. What was your first job out of college?
So I became an accountant. So okay. I loved my accounting classes in school, surprisingly. I liked financial statement analysis. I liked understanding the details behind financial statements. And once I got my degree and I became a CPA, I was like, hey, it would probably be a good idea to go and take a couple of years and learn the craft before I move it on to something different. I didn't think I ever wanted to be an accountant the rest of my life, but I thought, hey, with this degree and with this background, it shouldn't be that hard to get into other businesses or other types of roles. And after I worked at Deloitte for a couple of years, I realized, like, hey, this really isn't going to be for me. And so I started networking and trying to find different jobs. And I did find that my assumption that, hey, it would be easy to go find a different career was not easy. People wanted, or organizations wanted people fresh out of college, and they wanted to be able to train them to do the roles that they wanted. They didn't want to bring someone in who was 25 or 26 years old and train them from scratch. And so it really made me have to hustle a lot to find something in investments, and financial analysis is what I wanted to do. It really made me hustle and have to find something that was a little bit more entrepreneurial as opposed to the corporate roles at like a JP Morgan or a Wintrust or other stuff like that. And so after a couple of years at Deloitte, I ended up finding a job in 2008 working for a real estate developer, which
Perfect timing.
We all know wasn't a very smart decision. They were shedding assets, and they were cutting people, and they were trying to find hungry people who would work hard for less money than the financial analysts that they had there. And so I got a job at a real estate firm, and as the company continued to crater and shed more assets, they encouraged me to try to find businesses that were cash flowing that we could buy for close to nothing. And I really struggled to find that. They stopped paying me, and eventually I left, and I went back to accounting for a tax season, working at a family office. And
You just needed a job at that time.
I just needed a
The
job.
world is falling apart.
Yep.
It's hard to find a job.
And that's kind of where everything kind of changed for me.
Okay.
So,
And what was the next step after that?
so I was working at a family office, and someone that it was a friend of the family's, and worked there for a tax season. And at the end of the tax season, he offered me a job. But at the same time, I had an opportunity to start a medical spa with my dad. And so my dad actually found an opportunity to basically take over a medical spa. There was one spa that was part of a 50-unit chain that was collapsing.
And somebody came to your dad. Your dad was is a prominent dermatologist.
Correct.
There are others in his business too, right?
Correct.
Yeah.
It's a family thing.
Yeah.
So
this is interesting. Like, you were working at a business in real estate, and things were falling apart. They were asking you to go find cash flowing businesses for nothing.
correct.
That didn't work out. And it sounds like that's something similar happened with your dad.
Exactly. It just kind of like fell right into our laps.
Yeah.
And it was something where we had the opportunity to start it. My dad's like, I just don't have the time to do it. And so he was like, but maybe my son would be interested in it.
Yeah.
And so it took a couple months to analyze the business and work with the landlords to lease the space and buy
And that
new
business, was it
equipment.
failing because it was mismanaged? Did it have something to do with, because we were in the biggest financial crisis?
I think what happened was that the chain that was doing this, they just overextended themselves. They opened up 50 units
At exactly the
way
wrong time.
Yeah, just
Yeah.
way too fast. And basically, when it came down to it, they didn't have enough money to fund.
Over-levered themselves.
Right, they just didn't have enough.
Such a
money to
common
fund
story,
it.
right?
Yeah.
Yeah.
And so they didn't have enough money to fund the operations, and so they basically let a couple of good units fail. One of them being the one that we took over.
Yeah.
And then everything else, basically the whole business just disappeared.
Okay. So you bought that business out of bankruptcy for probably pennies on the dollar.
Correct.
Did any of the old management stay on?
None of the old management stayed on. We just hired the new team, or we just hired the existing team, and the team consisted of basically a nurse, 2 estheticians, and 3 front desk people.
Got
And so that was it. And so we started a med spa business. I had no background in the space. My only real education was accounting.
Yeah.
So I was able to do our books at that point in time, and I was someone that was able to kind of communicate and talk with my dad a little bit as I kind of got up to speed in the business.
Yeah. How was he involved in the beginning? Was he just kind of a sounding board for you, or was he actually in the day-to-day operations?
He was never really in the day-to-day operations, but it was more like Sunday night dinner conversations. So I'd be over at their house for dinner, and we would talk about the business, and we've been doing that for 15 years. But and the problems have kind of always changed. But yeah, we basically would talk about the business. He had existing relationships with all of our vendors, so it was really easy for us to start all of those relationships. So That was a lot of what happened in the beginning.
Got it. And how long was it before you were able to kind of right that ship, make it cash flow positive?
We were cash flow positive within 30 days.
Okay.
So we knew it was going to be successful like really quickly. And at that point in my life, I was like, all right, now what do I do? Mm-hmm. And I think that's kind of been like a similar theme with me throughout my career is like, okay, this is working. Now what do we do?
Which is interesting. I think a lot of people would just stay with that business.
Yeah.
Right. And you kind of, like I think you mentioned earlier, you didn't want to be in the date necessarily there every single day.
Correct.
So you took yourself out. You had somebody manage that business.
Correct.
And then what did you do? Look for next?
I looked for another job working in real estate.
Okay.
And so real estate
the first time.
Yeah.
The second time at work.
Yeah. And so I was like, all right, like let's try to go back and let's try to be that financial analyst that I wanted. And the nice thing was that like this was 2010. So it was right around the time that like side hustle or hustle culture was really kind of beginning. Mm-hmm. So it was cool to have something else. It differentiated me when I was going to the job market. And so I met with a bunch of different people in real estate. And one of the real estate developers that I met who still very close with today, I see him as my mentor. He's like, I don't have a job for you in real estate, but I do have an opportunity for you. I'm buying a operating business that's in Canada. Mm-hmm. And I'm looking for an assistant to help me be on site, be my eyes and ears, help me interface with the board of directors. I just think it'll be a really interesting experience for you. And ended up getting that job. I ended up getting a couple of other real estate jobs at the exact same time. But I was like, this operating business, this is a lot more interesting. So I got a job at an operating business. And the operating business, it was private equity backed. What they did was they made replacement parts for refrigerators in supermarkets. So like very, very niche, very, very different from the business that the medical spa business
or real estate,
I understood.
Right?
Or real estate. Yeah, it was just completely out there.
You said it was in Canada, so you were traveling there for a portion of the month?
Yeah, I was on the road usually, 2, 3, sometimes 4 weeks a month.
Where in Canada?
Up in Montreal.
Okay.
And so just complete culture shock. They speak a different language there.
They speak French, right?
They speak French.
Okay.
I don't speak French.
No. But do they even speak English there? I feel like they want to focus on speaking French.
They're very passionate about being French Canadian.
Yeah.
So there's a lot of rules that say French is the first language there.
Mm-hmm.
There are not a lot of people that speak English. We weren't in Montreal. We were actually in like rural Quebec.
Okay.
So probably like an hour and a half outside of the airport.
Yeah.
If you were to walk out the front door, you would see farms to the left and farms to the right. And so obviously as you get further away from a metropolitan area, there's less and less English spoke. And so
likely not a good place to build a med spa.
Yeah, no, not at all. Not at all. So I worked in that business for a while. That business, very, very interesting business, but it ended up failing. And so after a while I was like, hey, this just isn't a good environment for
What do you think happened? Why did it fail?
I think the main reasons it failed were, the company that bought them put on a ton of debt. Mm-hmm. There was no real management team or process. So we had to like really try to build a team real fast. And then they wanted to transform the business by adding a lot of new customers and putting in like new technology, and everything just failed.
It's so interesting, the common theme between the med spa business that you bought, which tried to grow and put on a ton of debt, mm-hmm. and then this business that ultimately ended up going bankrupt as well.
Yeah. So, and so it got really, it just was a really tough place to work. It was mm-hmm. very stressful. We were always trying to overperform for our customers and we couldn't. So it was just a lot of delivering bad news, which is just awful and a mm-hmm. terrible feeling. And a lot of our customers were US based customers. So who was the person who spoke English, who could deliver the bad news for the customer? A lot of times it was me.
Yeah.
But I got a real lot of experience. I got to see the inner workings of a manufacturing company. And really got to learn a lot about processes and learned a lot about management and leadership and reporting up to a board of directors and, everything. I got to see every single part of that business. And there were a lot of leaders. I mentioned my mentor before. He was only an interim CEO before they brought in a new CEO. And there were probably 2 or 3 other leaders after him. And so I got to see a bunch of different leadership styles and really got to learn a lot about.
How long were you there for?
About 2.5 years. Okay. And at that point, it was just it was no fun. And I actually found an opportunity to buy a second spa.
Okay.
And so this was 2012. The first spa we started in 2010. So and I ended up closing on a second spa in November of 2012. And I was like, I don't know. I think I was 27 years old.
Wow.
And so that was like the first real business that I ever bought.
How'd you finance that?
Combination of things. The seller financed most of it. I had some cash that I had earned from the first spa.
And was it just a seller that was older, they wanted to retire? What was the situation there?
It was a entrepreneur also. And she started the spa 5 years earlier. She didn't really have a lot of a personal life anymore. And managing 15 people was becoming a bigger burden for her than she wanted. And so she basically was like, hey, I just want to be an employee at the spa. Let's take some cash off the table. Okay. And that's what happened. So ended up having a pretty good relationship with her. She stayed on for a number of years. So I left the Canadian business and then bought that second business. What was really nice was that they had the founder, the person who I bought the business from, had a really, really good view of how a spa should run, and how to make patients love you. And that was never something that I was like really, really focused on at the beginning with images. At the beginning with images, I was just like, hey, let's just get the business going, and not really focused on being like a hugely customer-centric business, more just being like, hey, let's just make some money and go. And I think based on my experiences in Canada and then buying the second business, I think a lot of what changed in me and what I learned was really the reason that we're in business, any business, is to be there for your customers and to make your customers love you. And so when I kind of pivoted around that and I kind of got that through my head, which seems obvious, but it isn't obvious for everybody.
Maybe not so obvious graduating from college and focusing mostly on the tax side, which is all about numbers and less about the client.
Yeah. And so it was something that like really I think was pivotal for me to just really realize that like, hey, all of this is about making sure that you can that at the end of the day, your customers can say that you're honest, you charge them a fair price, and they're going to get more value than what they pay for.
I think in your LinkedIn profile, it says building great consumer-focused businesses.
Yep.
Which is ultimately what that tagline is, right?
Yep. And I think I wrote that tagline probably in 2013.
Okay.
And my profile picture's from 2013 as well.
Okay.
Yeah.
Okay, so you got 2 businesses. Sounds like they're operating pretty nicely. You got good management in them.
Yep.
What do you do next?
Still was involved.
Yeah.
Still was involved. Not on a day-to-day basis, but definitely all key decisions, all financial decisions, pricing, marketing, a lot of like the back office stuff I was involved in, but I wasn't necessarily in the spas on a day-to-day basis. And so what happened with that is I got the second business, the second spa business that I had bought. I got everyone comfortable with me. I spent a lot of time just sitting inside the spa, building relationships, getting to know the staff. And the company in Canada that I'd worked for previously ended up going out of business.
Surprise, surprise.
Surprise, surprise. And so the founder that sold the business and I had become really good friends. I was the first accountant that he had ever met with. Again, we were in rural Canada, so he didn't have a lot of people that he knew with my background, and he was a manufacturing guru, still like a very, very close friend of mine.
How old is he?
To this day. He's probably 41, 42.
Oh, super young.
Yeah.
I thought you'd say he'd be much older.
No. He, similar to me, took over a small business from his dad.
Okay.
And grew that business by like 10 times or 15 times. But great guy, like I said, really good friend of mine. And he said, hey, the business, it was called Continental Case, is going out of business. Let's buy it together. So I had 2 spas, and I was single not yet married, and I was
Like 28, 29 at the time?
I think I was maybe like a little bit older, but yeah, right around there. And so I was single, and I was like, let's do it. I knew the business inside and out. I did have a chip on my shoulder that some of the things and changes and stuff I wanted to do inside the business I wasn't able to do before. And again, very similar story to Images. When it went out of business, the first Images, when it went out of business, basically all we were trying to do is bring back our old customers. We got a great deal on the business.
Well, so how much did he sell the business for originally, and how much did you buy back the business for?
I'd prefer not to say it on camera.
Yeah, that's fine.
I'd prefer not to say it on camera.
But it was a big
I'd say that what he sold it for and what we bought it back for was probably 1/100th.
Wow.
Of what it was. And actually, cool story, we got the business going. We brought back a couple of our customers, and we were able to make our money back within a month.
Yeah.
So
it's amazing.
Yeah, that was a very, very cool thing.
But you were back in Canada.
But I was back in Canada, and this time it was mine. So it wasn't something, but this time it was mine. And so this time it was something where I wanted to be there.
Yeah.
I was really excited about the opportunity, way more excited about this opportunity than the med spa opportunity. Yeah. I always kind of just thought that the med spas was just going to be something that was just passive and an investment for me.
Yeah.
Whereas I looked at this as like, hey, this is going to be my opportunity to make a bunch of money.
Yeah.
I love the business. I love the economics of the business. I knew every part of the general administrative and sales side of the business. Didn't know anything about manufacturing. To this day, I still don't think I know that much about manufacturing. But anyway, that's kind of how things started. And that was, like I said, I think that was like 2013, and it was just exciting. It was very cool.
Yeah. I guess throughout this process, maybe we fast forward a couple of years, because a lot of it is, throughout those years, is blocking and tackling, operating.
Totally.
Two businesses growing.
It was brute force.
Yeah.
It was brute force.
Yeah. I mean, you running, at what point were you like, wow, this is a lot? I mean, were you stressed out? And you must have been running two businesses at some point. You're taking on more locations at Images, right?
We added. We really didn't try to grow the Images business until 2017. So this was 2013. So we had a good 4 years where it was really just like, let's figure out the med spa experience, or let's figure out the med spa business, and also let's figure out the Canadian business at the same time. The one cool thing about running two businesses at once, especially at a young age, is it's a lot of experiences. And it's a lot of learning different tips and tricks on how to operate a business better and how to lead people better. And so I feel like my career was just accelerated because I was doing so many things at once. And I've always been, like, learning has always been one of my true goals, and financial success also. But learning is always something that really motivated me. And so I was learning a lot, and I was excited about that, like really, really excited about that. So yeah, later, I think I got married in 2014 and started having kids in 2015. And at that point, I was still traveling. I was still running two businesses. And that was the point where I was like, this is starting to become too much. I had thought that the Canadian business would be an overnight success, where it would be something like, hey, it would be a 2 or 3 year turn, and then we would sell it. And as we got into years 2, 3, 4, we really realized that the business was good, but it wasn't something that was going to be flippable.
Yeah.
And so I had a lot of moments where I was like, how am I going to manage this?
Why did you realize it was inflippable?
It just didn't grow big enough.
Okay.
And we weren't able to diversify the customer base big enough. And I think we were looking for a bigger outcome than what it would have been. And so we were like, okay, let's just keep growing the business, and let's add product lines, let's add new services, let's see what we can do to get this to be a really big business. And so, again, even while we're running a business in Chicago, running a business in Canada, we're constantly trying to expand and grow. And I look at my partner in Canada as one of the best entrepreneurs that I've ever met. And he's pushing harder than me to do new things and try new things and expand our customer base. Yeah. And So it was just a lot of pressure to operationalize all that stuff. And I think, once you start having kids, it really kind of changes your priorities a lot in your life. And so I didn't want to be the dad that I was looking back when they were 10 or 15 years old and say, I threw away my kid's childhood to make money. But I was the owner of 2 businesses.
Yeah.
And so it was something that was a challenge, because you can't just be like, I'm an owner and a key person running them, and now I'm just going to step back. Like, there's just no way to do that. And so that was the first time, probably like 2018, 2019, where I was like, I'm just not doing a good job professionally or with my family. I have too much stuff going on. We need to start thinking about, selling the spa business, or selling the Canadian business, or somehow backing out of one of the businesses. And then COVID hit.
Yeah. And how did that change things?
The refrigerator business was in, we service supermarkets. And so supermarkets were an essential business. And we did a lot of construction inside supermarkets, and supermarkets were performing very, very strong. And so our sales ended up going through the roof. And I didn't have to travel, which was cool, because I wasn't allowed to travel.
Yeah.
And we realized that, hey, I could do a lot of my role from Chicago with Teams and Zoom and all that stuff becoming more prevalent. I was able to train, over Teams, over Zoom, and continue to grow the business even though I was away, which was awesome. It was something that was very cool, but I was still overwhelmed. The business was still a real lot. My partner and I had been partners for 8 years at that point in time, and he was tired. I was tired. And we basically just said, hey, let's try to meet some bankers and let's see if we could sell this business. And so that was 2020, probably like, I don't know, November or December, where we started interviewing bankers. And that kind of led to us selling the business. So we ended up getting introduced to about 5 firms. Because of some of the issues with the business, we weren't able to do like a mass process. We were going to one-off private equity sponsors to see if they'd be interested in a lower middle market, highly customer concentrated business that was in a very, very niche market. And so it just wasn't a very easy sell. We got connected with an amazing banker out of Montreal. And we spoke to 5 different groups. And when we spoke to the 5th group, we ended up getting an offer. And it was a lot of back and forth, but we ended up getting an offer. And I remember, and bringing this back to my dad, I remember once we got the offer, I called up my dad, and we didn't really know what the business was going to be worth. We knew that our numbers were on a really good upward trajectory.
What were your growth rates at that time?
It was a project-based business. So we got to a certain point in revenue, and we kind of just like stumbled flat for a little while. So we didn't have any like major, like our growth wasn't growing at a consistent 25% a year. We were a little up some years, we were a little down some years. And then post-COVID, some of the new business lines that we were doing started to connect. And like I said, construction spending was up at some of our big customers. And so I think in that last year, I want to say we were up like 30 or 40% over the previous year. And so that made the business hard to value, obviously, because
There's no consistency.
There just wasn't that consistency there. And so when we got the offer, I remember first I spoke to, my partner, and then I called my dad. And I called my dad, and I still remember thinking about this. And as I'm like telling him what the actual offer was, like I'm breaking down into tears.
He must have been so proud of you.
He's breaking down into tears, and I think a lot of what they talk about is core memories, and that's definitely like a major core memory of my life, is just being able to tell my dad, hey, this thing that no one knew what it was, that we've been traveling to Canada for 10 years, where like I said, just weird and goofy and different. It was very, very validating. So that was very cool.
And that must be even more meaningful. I have 2 kids, you have 3, knowing kind of now that you're the father and that relationship.
Totally. Totally. So that was that. And at that point in time, I had still stayed with the business for a couple of years. That was 2021, November. But they brought in a new CEO, they brought in new people, and I didn't have as much value as my partner did. And so he's still operating in the business today. I still have a carry inside of the business. So I still stay very, very close to the business, but I'm not involved operationally in that business at all anymore.
More like an advisor.
Yeah. And by the month, advising less and less and less. So, but it's neat. It's nice to still stay involved in the business. It's nice to still keep tabs, and we still have a ton of people that I've hired and trained and coached, and a lot of people and a lot of really good relationships that still happen up there. So,
well, for you, it sounds like the best outcome, because a lot of these have burnouts, and you have to stick around for a couple of years, be very involved, and you were able to get out. All right, so you were able to kind of sell that business, do very well, and then what's going on with med spa images?
So the med spa space, starting in 2021, there's a big group of private equity firms that solely focus on rolling up healthcare businesses. So buying dermatology practices, buying ophthalmology practices, veterinary practices. And so there's a bunch of firms that have sprouted up over the last 10 or 15 years that have done really well, buying a bunch of small businesses and packaging them up together. And the businesses that they've done them with are all very trendy. So a lot of the same people a lot of these same groups are doing these same businesses. And in 2021, there was just some research papers that came out that said, are med spas the next big roll up? And so those research papers started coming out. I started getting a lot of inbound emails and LinkedIn messages that are saying, hey, we're really into med spas. And behind the scenes in all of this, so when we last touched on med spas, I had 2 med spas. At this point, we had 7. So this was 2021. We had bought a couple of other spas. We built some other spas, really learned the business. And I'm very proud of it. A beautiful business that just had a really good culture. The opposite of the Canadian business, but had a really, really good culture. Really good employee retention. Valuing everyone and valuing careers, educating people. And so we had really, again, opposite of the Canadian business, very consistent growth year after year after year. And there aren't many multi-unit medical spas out there. And us being 7 units, it was something that was very, very attractive to private equity. And so
they just came to you? Did you go through an investment banker?
I just got cold emails. And so through the years, starting in 2021, you saw a lot of like 3rd tier firms. And then as it got a little bit further and more people were into the thesis, you'd see, 2nd tier firms. And then you started seeing not bulge bracket, but that's the term that I'm thinking, like really, really good
high quality blue chip,
really good high quality private equity firms that were starting to email me. And so I started taking some phone calls. I started doing some of these Zoom messages or Zoom meetings and learning about private equity. I never really kind of thought I would do it, but a firm here in Chicago was like, hey, we want to do this. We want to do it with you. We want to do it right now. We think you're a good entrepreneur, and we can support you and help you to grow this business. And I was like, I just don't think I want to do it. I still didn't have everything in like financial order to really say I felt really, really comfortable doing it. And they go, we'll pay you over, 12, 13 times your earnings. And at that point in time, I was like, whoa. Like
that was last year.
That was last year.
Or was the end of last year?
That was last summer. So that was June of 2023.
The timing is so interesting because so much has slowed down in that space, and you were still getting offers like that.
Totally.
Must have been very appealing.
Yeah. And it was something where, like I said, I love the business, but I look at myself as I said before, I like learning new things. I truly feel like with the spa business, we figured out the full playbook. We know what to do. We know how to coach employees. We know how to staff centers. Never ever had hiring problems, which is a lot of thing that service businesses had faced over the years. And so, I put together a book.
I mean, you must have really treated your employees well not to have a lot of turnover in a service-oriented business. I mean,
Correct.
That's the key ultimately.
Yep, I completely agree. If you can get your employees to stay, you're gonna have consistent relationships with your customers, and your customers are gonna want to stay, and the business is gonna grow. Like really, it's as simple as that. And I guess there's a lot of details behind it, but it's pretty. I think the formula is pretty simple. So anyway, at that point they said, hey, yeah, we'll give you 12 times. And I wasn't going to just let one group look at the business. So I put together a book. I had spoken, like I said before, to probably 15 or 20 other firms. And I always had in the back of my mind, these are the quality groups that I could see myself doing business with. You're always kind of required to roll a portion of the proceeds of the sale into the new business. And so it's very important when you're making that decision that you're choosing groups that you think are going to end up expanding the value of your investment. And so I had 4 groups that I spoke to. I put together a book. I released it to them in September. By the end of October, I got 4 offers, each one better than the last. And it was, like I said, it was similar to the core memory with my dad last time. Like, I remember where I was, where I got the last offer, and in tears, not thinking that this business would ever be worth what it was. And so I ended up, I had two options. I could either become a platform company where I would buy other businesses, other med spa businesses, or I could become part of a other med spa platform and work for someone else. And at the end of the day, I did, like I said, I decided to take the lesser role because I did have a lot of background working with private equity. I knew how much pressure there would be, and I decided to take a lesser role and take less money as well for the right thing for me, for my family.
Yeah.
So
we talked about this yesterday, or maybe even earlier today, about the importance of work-life balance, especially with kids.
for sure.
I mean, you sold 2 businesses. You're mostly out of the businesses from an operational day-to-day perspective. You just turned 40, so there's still a lot of time ahead to get young kids. I mean, how do you look at the work-life balance moving forward? How do you look at your next opportunity? I'm sure there'll be another venture at some point.
Yeah. I think my kids are still at like this really cute age. My kids are 8, 6, and 1. And so those are the times where they need you and they want to be with you, and you can help build foundations for them. And so for me, my decision, like I said, to take a lesser role and to focus more on family and balance was really to be there for those formative years of my kid's life. And also to kind of just give myself a little bit of a break after, 15 really dialed up years. And so, I think going forward, you could continue to say, what's that higher mountain? And that's kind of how I'm built. And I think I will go back into that mode someday. But for right now, I think that the personal, familial type mountains, those are the types of things I'm looking to accomplish over the next, 4 to 5 years as the kids are growing up.
Yeah. And that transition sometimes is hard. After you've kind of been grinding for 20 years.
Yeah, I kind of feel a little lost sometimes just because I have been grinding, and now I feel like, what do I do with myself?
Yeah.
And those are good, fun problems to have. And I still stay busy, but
Drop the kids off at the bus in the morning.
Yes, every day. So, but those, like I said, those are good problems. I'm very proud and happy to have those problems.
Absolutely. So I guess just to finish this off with one last question, if you could give one piece of advice for an entrepreneur that's starting off his career, what would you share?
Start young. Mm-hmm. Definitely start young. I think that when you have a family and kids, your obligations are a lot more, and you just can't take risks and do a bunch of different things. I don't think a lot of people look and they're saying I have like a risk loving profile. And I don't think anything I've ever done has been risky, because I've been confident that they've been good investments and there's stuff that I think I could tackle.
You're buying these companies pennies on the dollar. They're just smart.
Correct.
Low risk.
Correct. That's kind of how I've always looked at it. But I do think, with kids and wives and all these different obligations, life definitely gets more stressful as you get older, and you have more stuff that's, piled up on top of your shoulders. And I think that by starting young, when you don't know all the risks and you don't have as much pressure, you're able to make decisions and work really, really hard to make the thing successful. For both of my things, like I said, I've been doing the refrigerator business since 2009, and I've been doing the med spa business since 2010. None of them were overnight successes. Mm-hmm. Everything was year after year after year, slow growth. And if you can do one or two meaningful things a year, and you look back 15 years later, you're going to say, hey, I did a ton of amazing things. And that's kind of how I think everything kind of worked out with this. I don't think we did anything, looking back, it looks really special, but on a day-to-day, year-to-year thing, I don't think anything that we did was super complicated.
Well, show up every day and do the right thing.
Exactly.
Right?
Exactly.
Consistently.
Totally.
Yeah.
Totally.
Well, it was a pleasure having you on here and your story. It's remarkable.
Thank you.